Ladies and gentlemen, welcome to the Big Tech Frenzy. Today, I want to talk to you guys about an absolute market mania. Okay. There's some news about this. I also wanted to highlight a video that I have coming out tomorrow about SoFi. That's going to be very exciting. But a video like this is very important. Okay. I think that this is where, time in the markets, getting a little bit of expertise about being through these types of events before is very calming. However, it still could mean that it is a lot larger than what we're just seeing in today's video. Or in today's market, I should say, rather than just my video. But let's go ahead and talk about what's going on and some of the market moves that we've ended up seeing today, my thoughts, my stock moves, and we'll go from there. All right. Our audio's good. Levels are good. Okay, let's do it. 3 minutes late. Yeah, bogus. Bogus. I am not believing you. Okay. First of all, Nvidia came out with some pretty spectacular earnings, beating on both the top and bottom line. EPS came in better than expected. Expected 84 cents, they got 89 cents. Okay, expecting roughly around 38 billion, they got 39.3 billion. And then even a guidance raise going from $42 billion of EPS, then going to 43 billion. Okay. However, the stock had seen, and if we even go more to the minutes chart, near the end of the day, an unbelievable stock drawdown. Now, you'll actually see roughly around somewhere near the very end of the day, I actually sent out some alerts saying, hey, I am buying Nvidia. This is absolutely ridiculous. I got in at right around the 120 marks again. So buying more shares here. Okay. But this still could be drawn out even more if people think that there are more potential recessionary fears. Okay. Which can happen. Tariffs are going to be a big thing here. But I think that the important part whenever you're looking to be a long-term investor in any stock is to see the longer-term picture. Now, talking specifically about Nvidia and not the other companies that I had purchased today, which you could find here. Okay. Also around the exact same time, right at the end of the day, those alerts were also sent out. I bought them at the exact same time. But the long-term effects of these businesses, and also one of the things of rotating into bigger tech that I find also very good is that I've seen a lot of people in retail see some stocks like Robinhood or Palantir or a bunch of other really crazy names, and even I've been a part of some of those businesses, but now people are starting to look for even more speculative companies where they want to find the next 2 to 3x. And so the quality of businesses start to go from the frontier companies like the Amazons, the Googles, the Nvidias for sure, to then the second grade companies of the Palantirs, the Robinhoods, all of these other secondary level amazing businesses. And now this third or potentially even fourth layer is people trying to follow into investments like Archer Aviation or a bunch of these quantum computing names that aren't potentially, seeing real companies just yet, but it's on the opportunity that those do become massively large businesses. If we do go into any sort of recessionary fears, those companies will be destroyed, and some of them will actually, go away. That's the absolute worst part, right? Dark is before the pitch black. So some companies will not come back. This is why I think it's important to own businesses that are just the leaders in their space. And as long as you're tracking the, secular trends of those businesses that they will win even whenever they come back or whenever the macro starts to turn more into tailwinds once again. So the companies that I'm talking about are companies like Google, Nvidia, Shopify, Tesla. I think that these are fair businesses. They might have a very hard time in the short term, but you could potentially find them in the longer term still doing what they had planned for the long term. Now, let's specifically talk about Nvidia because honestly, guys, this is where my entire focus has been spent. And then we can also talk some SoFi on that as well. where I rank SoFi as one of these top businesses, and then also talking about a video that I have coming out tomorrow. I'd like for you guys to see this, but you have companies coming out like Amazon, like OpenAI, like a bunch of many businesses. This is actually one that I think was probably the most exciting. This is seemingly where the stock just started to take an absolute tumble. Sam Altman, the founder and CEO, and then kicked off as CEO and then returned to CEO, comes out with a new Chat GPT 4.0, their general purpose new AI model, only for the people who are spending $200 a month. This, the cost of this model is just absolutely insane. Okay. He said, we really wanted to launch it to Pro and Plus at the exact same time. And we've been growing a lot and are out of GPUs. We will add tens of thousands of GPUs next week and roll it out to the Plus tier then, but hundreds of thousands are coming soon, and I'm pretty sure y'all will use every single one that we rack up. Hundreds of thousands, and you guys are going to see full, like they're going to be supply constrained at the end of that rollout. We're seeing similar commentary from Google, Amazon, Microsoft, every single one. The business that Nvidia has laid out for itself, which seemingly there is still no competitors, is dominating. And the fact that you can get this company on a massive sell-off after better than expected earnings is just crazy. Okay. On a free cash flow basis, which a lot of people say might be the cleanest form of earnings because it strips out all those potential adjustments that you might see, well, yeah, I'll leave it there. But whenever you look at this versus the other companies of really any size or Mag 7 or anything, it is one of the cheapest businesses that you can find after today's sell-off. I mean, it's actually crazy how cheap Nvidia is now. And I think that there might be this stigma amongst retail that this is some, mega expensive, fast-growing business. I mean, of today's price to free cash flow, we're talking about a very, very cheap rating. Okay. That's very surprising. So keep an eye out for these types of companies. Monitor how much their multiples are and see what they're doing. Like a lot of people are very excited about Palantir, and that's been seeing some drawdown. And personally, I have not been a part of the Palantir come up, so I don't really believe in it stopping at 85. I really do think that this stock belongs somewhere in the $40 ranges, which sounds like a far off way, but it really got there in a very fast period of time, and to me was a little bit of a stretch on their multiple. Whenever you look at a company like Nvidia versus Palantir, you really get to see the similar market effects of stickiness, zero competitors. I got to take a sip of water. Sponsored by Shift 4. You really get to see the stickiness of the business, considering they don't have any competitors, not even on the Grace Blackwell 200, but even on the Blackwell Ultra, which is going to be the next potential product that they end up rolling out, the GB300s. So, this is all like, not only do they have a market lead compared to their competitors, it's going to extend. The only thing that people start to worry about with Nvidia is, hey, are competitors going to potentially wait to get their next products if, they start talking about the next product that's coming up? We're seeing that on the gaming side already. Gaming missed because they announced the 50 series cards, and then the 40 series people started to hold off on because they wanted a cheaper, better performing 50 series card. My cough, also sponsored by Shift 4. What's so funny? That is true. I did get sick at the Shift 4 conference. Well, not them. I got sick, I think, on the plane. Everyone on the plane was coughing, but I was going to and from the Shift 4 conference. So both the water, they knew we were going to get sick. For some reason, they throw in a bunch of lozenges. I don't know why. No, I'm just kidding. But yeah, it was a lot of fun. Anyway, let's talk about Nvidia again. Stop with the distractions. And it's also my cough that's taking it away. But yeah, so very sticky product, extremely, extremely fast growing. Okay. We're talking about potential compounded annual growth rates staying above 50%. They want their gross margins to continue to stay high. And in fact, well, I mean, not in Q1. They think that that's going to go down to about 71%, but then in a re-acceleration back to the mid 70s by later in 2025. I just am not seeing it at all. Now, this can be drawn out. And let's separate the weak paper hands from the diamond hands. Because if things potentially do get worse, okay, if like companies can get way, way more sold off than what people can originally think can be, happening in their business. SoFi is a great example of that. SoFi really has never missed on revenue or earnings or anything like this, and yet the stock got sold off all the way to $6 a share, or actually $4.24 a share, whenever I thought things were, potentially super bullish. That I could not have imagined happening. Okay, so if Nvidia does fall into the double digits, out of the $100 ranges, the really important thing, this is what's going to separate, you as a retail investor from what every single other retail investor is going to do. Hold. Okay? Do not try to sell to that type of event. Because here's what's going to happen. You're going to think, okay, well, if that event does happen, I can get best of both worlds. I can sell here today where it is still very high. It will run down to that price, and then I will re-enter with not only the capital that I had before, but also the gains that I had on top of that to buy me more shares, and then the cycle will return like Tanner said. I don't agree with that. I'm sure there will be people that write fantastic articles about how they did this trade. To me, I like to put it in my mind as if those people are not even real. Okay, it is a fallacy. It's a very dangerous way to play, and the reason is that one, you have to get your sell right. Okay, so you have to sell before it draws down 9% or something like it already has done today. Then two, you have to re-enter correctly. Okay, and that is actually more hard than selling. I could sell today. If it starts to draw down, then we could re-enter at a lower price potentially. None of this is guaranteed. But if it starts drawing down, and let's say the plan is to buy back at, James Moore says low 70s. Okay, well, what if the market takes it down to mid 80s and then starts to recover? When did James Moore, for example, get back in? Right? So this is the extremely hard part about buying into the stock, because then it'll start to recover to the 90s, 95s, and then what? Do you then purchase back in? Like, think honestly. I mean, if hindsight is 2020, if you knew that it was going to start recovering back then you would buy. But a lot of people say, oh, well, this is just a dead cat bounce. It's going to continue back to my mid 70s model. And then you never end up getting in because it never did end up turning around that way. Things could turn around on what's the opposite of a black swan? White swan news, even though that's not what black swan is, just the uncertainty level. But let's say news that was unexpected, that was very good, that ends up coming out, that actually turns the market around faster than what people are expecting. Okay. Then you do not have your reentry. So to separate yourself from the people who potentially are going to underperform, retail as a collective, okay, all of and it's actually inclusive of a lot of people who aren't actually trying to get educated on stocks, and they're buying things because they heard their brother or dad or sister or son talk about a stock, and so then they end up buying it, and then they don't know when to potentially sell. They're not following the news, they just like the name. That is actually a large majority of what retail investors are doing. But what I really am trying to sell you guys on here is buy and hold for the long term in industries and companies that you believe are going to do well over time. And in my opinion, I mean, maybe I've just been doing this too long, those types of industries are not hard to find at all. Okay. Things are going more digital. People are using less cash. People want automation. People want cheaper, better, faster. It's that simple. Okay. Find the industries, find the companies where people are solving a problem that makes things cheaper, better, faster. It is that simple. Okay. Then make sure that they're large enough to survive a correction as if they were not going to get any sales for quite a long period of time. Put in a margin of safety there. Okay. That means if you are going to buy into, autonomous driving or something like this, don't buy the tiny name right now. If you are seeing a buy, like there is a ton of fear baked in, a lot of uncertainty, but you still want to buy the dip, buy the dips that you know these are companies that are going to survive. Google's not going anywhere. Nvidia is not going anywhere, printing $60 billion in the last year of free cash flow. They are not going anywhere. Okay. MicroStrategy, that is one I would not buy. Okay. The underlying company is, not as strong as what their amazing Bitcoin holding might be doing. Well, that is going up. SoFi, I would buy. That company is doing very good. Now, they could be hurt fundamentally on their macro side, but they will survive. Rocket Lab, I would not buy that one. That's not what I'm looking to buy right now. No, I want great businesses. And I kind of made the shift over to big tech a little bit earlier, probably about a month or so ago. I started to buy a lot of, probably about 2 months ago. Google, Amazon, Nvidia, and now I couldn't be happier. Obviously I could think, hey, well, I potentially want my, cost basis on a lot of those positions to be better. But that has always been the way that I've invested, is potentially just a little too early or something like this. But I want to buy companies that are going to benefit on trends that happen over 10 plus years. And guys, I promise you, well, anyone can get a lottery ticket right and they can, do super well on their investment strategies. But this is really where you're going to see my type of investing, of buying shares and holding it for the long time, seem like an absolute genius play whenever there's a lot of uncertainty. Whenever it's just pure bullishness, yes, the leveraged plays, the unbelievable leaps on all the time, those are, fantastic trades. It looks like everyone's making 5X's around you and you're sitting here making, 30-40%. That's fine. But in bad times, they get killed and you survive. Okay. And hey, it might be time to buy more leaps. There's going to be stories coming out about if there are large dips that people bought more and very risky plays, but there's going to be stories where people get absolutely buried, and there's not a whole lot of articles written about those people. So you miss out on the people that actually, don't have enough money or don't have a place to actually tell their story, because no one wants to hear about the losers. Unless it's a ridiculous loss. And then once again, you actually get a platform to talk about, because people can't fathom somebody losing their life savings in a matter of a single trade. We don't want to be those stories. Okay. We want to be, and Hood, honestly, I know I said second tier business. They'll be fine. They might actually get, sort of panicked on the fundamental side, because their, trading volume could fall down if people don't actually see a potential market that they want to invest in. And right now, retail is still very strong. Okay. Viewership on YouTube is high. Everything's fine. Everyone's very excited to buy this dip. But things can be extended for longer periods of time if there is recession in the name. If this is really what people are starting to expect, and then, the Fed starts to get worried, all these sort of things, and tariffs start really pouring in on, what was the date? March 4th? Yeah, that can happen. I'm going to see viewership get pulled back a little bit as people lose hope in their ability to invest. And I pray that, a strong percentage of you guys don't lose interest in American markets, because this is really where you get paid. Okay. It's doing all the work now. So then whenever you can hold through those times and come out a much better, much stronger position, lower averages on the other side. But it's not about buying at the very bottom, at least in my opinion. It's about buying all the way through that tranche. Okay. So we buy on the way down, in the dip, and then on the way up. That's how I do. Deeper dips are coming. I mean, in my opinion on where the market is right now, is that I really don't try to place any emphasis on trying to understand it. I don't think that Warren Buffett knows where it's going. I don't think that, other YouTubers or commentators on this know where it's going. Yes, if there are 50% people say it's going back up and 50% of people say that it's going down, 50% of the crowd will be right. But those people were right or wrong. Like, there's a lot of people that get each individual market cycle correct. There's not a lot of people who get multiple market cycles in a row correct. Okay. That's why it becomes unpredictable, not because somebody gets a single movement right. Uh, in my opinion, buy great companies, hold them for the long term. You're going to see if things do get good or bad, though, how amazing a strategy that I have is. And I hope that I'll try to bring every day for you guys a level of calmness that is needed in the markets. And whenever things did get a little bit frothy or, you know, things like this. However, I don't think that is happening on the AI side. I really do not. Like, I think the amount of investment that is needed for AI and the amount of potential revenue generation that could come there is so severe. This is why I'm just going to continue to buy. But a lot of these companies are, international businesses, and tariffs are a straight tax on that business. So it is real. Wall Street Engine talks about the unbelievable investments in some of these companies, talking about AI server production, AI infrastructure, AI and data centers, and galore, cloud infrastructure. It is an unbelievable time for, especially with these companies with massive cash stacks like the Mag 7 actually has. In recessionary times, those companies obviously do feel it fundamentally in their individual quarters, but their cash stacks are just so large that they still will be pouring out a lot of investment. Each individual quarter they'll want for better and better results. So we'll see layoffs happen if things get worse and these sort of events that we're already starting to see. But, you know, they are still going to be racing to be first place in that AI race. And if a single company in that Mag 7 feels like they need to pull back a little bit and not be as aggressive, the other ones will be more aggressive. And so then they'll fall behind. So then none of them can slow down, you know? And just like OpenAI said, they can deploy hundreds of thousands of GPUs, and they believe that every single rack that they set up will be immediately used by their user base. And they're only one player. And then you see places like, Grok is setting up their apps now and their websites and everything. Grok 3 is doing absolutely amazing. And it's so funny how everyone changes what they think is the top players, right? Oh, Grok 3 is in the lead. It's destroying. Oh my God, OpenAI comes back. They're doing absolutely amazing. And then, everyone's like, oh, Gemini's falling behind. That's what they said whenever Gemini 1 came out. Gemini 2 was a groundbreaking release. What happens when Gemini 3 comes out? It'll be back to Gemini is now in the lead. And they're all racing for first place, whether that is, Claude or Llama or, ChatGPT or Grok, whatever. There's one player that benefits from all of that, and it's Nvidia. Tanner, do you believe that Robinhood's earnings will drop significantly with a market downturn? So it depends, because they get paid not based on where the markets necessarily are. I mean, yes, there are some assets under custody events there, and if there is market drawdowns, then it would bring down assets under custody. So there will be some fundamentals there. But if it's large volatility in an uncertain market, then they could actually see a better than expected results as people try to buy the dip. And retail loves to initially buy the dip on changes in market sentiment. That's the thing. The only problem is that institutions are a little bit more patient, and they will buy sort of the second tier or third tier waves of a market, and retail gets exhausted by that point, and then they end up selling at those points. That's why retail has such a bad performance. Usually 2 to 4% per year is because they actually see a lot of losses on selling things that would come back. Institutions don't want to do that. All right. Yeah. Upside is better than the downside for Hood earnings. Yeah, companies like if there is going to be any like real change, like I don't know, those really speculative names and the upstarts and everything like this is like, all right, they're almost like leverage positions on what SoFi is doing, but in bad times they're leverage positions to the downside. You know, Mo Money says, "What's going on? I'm down 175,000 in 1 week." Happens, brother. Just hold it for the long term. Invest money that you know you're okay to hold there for a while, and buy businesses that will be okay. Now, I'm not actually one for adding to defensive stock. I really don't rotate my portfolio all that much. Maybe I should be a more active investor. I'm just really not. Um, it's never benefited me to do that. I felt like every time I did do that, my timing was off. I'm not a good timer of markets. Tomorrow could be a very green day. Like, I mean, honestly, good news happens like this. The one thing that I've benefited on better than potentially 99% of investors has just been my straight optimism. I've been extremely, extremely optimistic on markets at all times in my investing career, even when things are bad. And so when things are good, I'm adding and stocks are going up and my portfolio does really well. And then in really bad times, early 2020 or 2022, my portfolio was getting killed during that time. Um, it hurts, but I was optimistic on US equities. So I continued to buy. And you continue to hold, you continue to hit higher and higher highs as long as you are holding for, long periods of time. Is this a crypto channel? I talk about a little bit of crypto, Solana, Bitcoin, Ethereum, just slightly, but not exclusively crypto. I like stocks more, but like all the crypto that I have makes up for like less than 10% of my portfolio. Um, Diversify investments geographically. Europe is doing very well. Yeah, I mean, so the thing is that this is why I like buying large businesses. So I think that the idea of buying diversifying investments geographically is actually more of a risk than buying companies like Amazon, Google, stuff like this, because they already do so much international business that you're actually getting worldwide diversification while still buying U.S. equities. So I actually think that that's a very old school way of thinking. One second, I'm gonna blow my nose. I blew my nose. Okay, let's talk. He's always late. I'm not late. I'm here on time. All right. Um, can we see Palantir to 65? I mean, I think so, but I've never been really bullish on the run up in the first place. So, yeah, I'm just slightly sick. Ladies and gentlemen, I actually had news to cover, but we are going to have to push that off a little bit. Shift 4 deepened their relationship with um venues that they're actually dealing with. They closed out on more. They're gaining market share there. And tomorrow, I am putting out a video on a new SoFi interview. Guys, this is very cool. An executive has spoken out about SoFi. It's a very cool piece. I have a lot of idea or thoughts about this. Should be a lot of fun, but especially with SoFi, with Nvidia, all of these companies buy great businesses. I think that we have those in these names. But I do have a course member only live stream to go to at 9:15. If you guys end up joining the course member course member thing, the course, we can get you into that live stream before 9:15. Check that out at futureinvesting.pro. Link is in the description down below. For coupon codes, we don't do that. Sorry. Some people ask if it goes on sale. It does not. Yeah, Wes. I mean, I wish. Like, turn off my camera and just shout profanities at how much I hate this market. But no, I'm just sick. All right, ladies and gentlemen, thank you all so much for watching. Appreciate the time. If you guys want to see more live streams like this, hit the subscribe button down below. Bye for now. Love you. Peace.